Take a look at this chart. It shows the increase in the market capitalization of different financial assets in the past 3 years. Global equity markets have grown by $27 trillion, the S&P 500 by around $15 trillion, and gold by $11 trillion. Together, these moves have generated trillions of dollars in wealth, making investors significantly richer along the way. Now this small bar, right here, that's Bitcoin, with only a $1.8 trillion growth, which has corresponded to roughly a 500% increase in Bitcoin's price. So while money has poured into equities and gold over the past few years, Bitcoin's rise has occurred with comparatively little capital. If just a small fraction of the profits made in these other asset classes were to flow into Bitcoin, it could set the stage for a much larger move up in Bitcoin's price. We're going to look at whether this is a plausible scenario in this video. To put all of this in perspective, here's a chart showing the net worth of just the top 1% of the population. In the last 3 years, their wealth has grown from $40 trillion to $50 trillion, so an increase of $10 trillion. In other words, the richest investors have never had more dry powder in history. And that kind of wealth expansion potentially opens the door to capital reallocation towards Bitcoin. Even a portion of this wealth being rotated into a small $2 trillion asset like Bitcoin could potentially have a massive impact on price. According to a recent study, it takes roughly $135 million of capital to move Bitcoin's price by 1%. For gold, it takes about $2 billion to trigger a move of 1%. So a 1% reallocation of the recent $10 trillion wealth accumulation of the top 1% of the US population towards Bitcoin would hypothetically lead to a 700% move. Of course, this is a highly theoretical scenario because it would require that entire amount to hit the market all at once to produce that effect. But it does raise a more realistic and important question. Should we expect capital to rotate towards Bitcoin in a more substantial way in the coming months? Well, we may be seeing the early signs of this taking place. Just last month, gold went from a $9 billion inflow to a $2 billion outflow, telling us that capital is starting to move out of the traditional safe haven after its record advance. At the same time, Bitcoin inflows doubled, rising from $3 billion to nearly $6 billion. So, money is already starting to rotate out of the yellow precious metal and into what many like to call digital gold. In fact, if we zoom out further, the trend becomes clearer. The surge in Bitcoin inflows really began back here in April, just after Bitcoin bottomed following Liberation Day. Since then, we've seen 7 weeks of inflows, totaling nearly $10 billion, compared to just 2 weeks of outflows, amounting to only around $200 million. While these are solid inflows of capital, they aren't extreme, and we happen to think they could still very much ramp up. And one potential reason why that could happen, despite Bitcoin being near all-time highs, is there's still no real signs of euphoria in the market. This line that you see here tracks global interest in Bitcoin. It's basically a proxy for how much attention the asset is getting. And right now, that interest has fallen to its lowest level in the past 6 months. In fact, we've only seen sentiment this low 4 other times since the 2020 pandemic. Right here, 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 and here. If we look at what these moments correspond to on a chart of Bitcoin's price, we see that it formed a local bottom and rallied shortly after in each of those instances. But this time, interest is falling while Bitcoin is climbing, not declining. To us, this is a sign that we're not in a euphoric crypto market like we saw, for example, in 2021, when interest in Bitcoin was surging. Today, interest in Bitcoin could still pick up, leading to an acceleration of inflows into the asset, and hence pushing price higher. Of course, the big caveat is that in order for investors to reallocate their capital to an asset like Bitcoin, uncertainty needs to come down, whether that is economic or geopolitical uncertainty. You see, Bitcoin is an asset that thrives on certainty. Investors are only willing to allocate to young and volatile assets like Bitcoin when they feel confident about the broader market environment. When they feel uncertain, they tend to move away from risk assets like Bitcoin and shift towards defensive positions like cash or gold. We can see this relationship by looking at a chart of the US Stock Market Volatility Index, also known as VIX. This index reflects how much volatility options traders are expecting at any given time. It tends to rise during periods of heightened uncertainty, when traders are anticipating a sharp market move, like in these instances highlighted in red. And it tends to decline and remain low when market conditions are more stable and confidence improves, as seen by these green boxes. Now, if we put Bitcoin's price on top, we see a clear pattern. When the VIX is rising, Bitcoin tends to perform poorly, and when volatility expectations drop, Bitcoin often enters strong uptrends. Recently, the VIX has been falling since the Liberation Day sell-off, but as you can see, over the course of the last year, we've seen volatility steadily rise as a result of tariffs, and now an escalating conflict in the Middle East. This has been preventing a larger rotation into Bitcoin from occurring. This uncertainty is something we've highlighted in our recent crypto videos, and can be seen through this chart. Following Trump's tariff announcement in April, this index spiked to the highest levels in the past 100 years. And now, the deadline for trade negotiations is now less than a month away. So far, the Trump administration has not really finalized any deals yet, except for a partial deal with the UK. In fact, there have been instances of escalating tensions between the US and EU, with Trump threatening to impose tariffs on European goods as early as this month. Adding to that is the recent conflict between Israel and Iran, which has introduced another layer of geopolitical risk into the market. While the situation hasn't escalated further for now, it's keeping investors on the sidelines and limiting inflows into risk-on assets. So that's the big risk today, that these negotiations don't get completed within the 90-day period. Or the conflict in the Middle East escalates, causing uncertainty to spike further, and for capital to rotate out of risk assets and into safe haven assets, which could put downside pressure on Bitcoin. But if we zoom in on this chart, we can see that uncertainty has been declining in recent weeks. That's likely because of increasing confidence in trade negotiations as progress is being made with countries like Qatar, India, and especially China. This is a constructive development from just a few weeks ago, when a lot of investors were pricing in a full-blown US-China trade war. In our view, as long as these negotiations progress smoothly and geopolitical tensions in the Middle East do not rise, uncertainty should continue falling, bringing more clarity to the market and thus accelerating capital rotation into an undervalued asset like Bitcoin. That's why we remain bullish. In the near term, Bitcoin is digesting the 50% rally it saw off the April lows. Price is currently quite extended from its key moving averages, a short-term pullback here to retest these moving averages around $95,000 or a period of consolidation to allow for the moving averages to catch up is possible. The next key resistance we're watching is $112,000. A break above would likely open the door for a move towards the $120,000 to $130,000 range. So while some short-term weakness is possible, we believe the bigger risk is being underexposed to the upside potential here. By the way, in the month of May, we've locked in some solid profits. Our top trader, S-Lock, had 20 winning trades, totaling 193% return. If you want access to market updates, educational content, and buy and sell alerts from 3 professional traders, make sure to join our crypto trading membership using the link in the description below.